Guys, I've been negative on silver for a while now. But if you've been holding silver for close to 20 years like I have, you probably would be too. Now, with Friday's breakout in the price of silver, are things about to change? And is silver about to catch up to gold, which continues to make all-time highs? Also, what should you do if this is the beginning of a big run-up in the price of silver like we had in 2011 when it went to about $50? Let's take a look. So let's start off with why I've been negative on silver. Here is a price chart on silver, which is inflation adjusted. So the inflation adjusted price for the 1980 run-up with the Hunt brothers trying to corner the silver market is $144 an ounce. The nominal price was about $50 at this time. Now, more recently, the 2011 run-up when silver ran up to $50 an ounce, the inflation adjusted price is still $68 an ounce. So we are about halfway at that price right now. So for all you people that have been buying silver around here, 19, 20, 22 or whatever, and are happy with the price, that's good if that's where you bought it. But a lot of people might have bought somewhere around these levels and have been sitting down here for many years underwater. Now, comparing that to the inflation adjusted gold price in 1980, that was $26.54. The nominal price was about $800. And the run up in 2011, when it went to around $1,900, that inflation adjusted price is $25.40. So by both measures, the gold price is now above both of the historical peaks, even adjusted for inflation. So that's why I've been negative on silver. It hasn't kept up with inflation. It's still 50% below its inflation adjusted highs, while gold is now at or above its inflation adjusted historical highs. And looking at the gold silver ratio, you see that in 2011, when silver had its run up, the gold silver ratio went as low as about $32. More recently in 2020, the gold silver ratio was almost 120. And now, even with this run up, we're sitting at a gold silver ratio of about 80. So even if you bought in 2005, it was 60 or so. 2014, it's still 60, 70. So we are still way above that level, and silver is very cheap compared to gold still. Now, hopefully that's going to change. Now, the gold silver ratio, of course, is important, but what is more important is the price of gold and silver and what they can buy in US dollars. So at a gold silver ratio of 80, you wouldn't be too happy if gold was 800 and silver was 10. But at that same ratio, you probably wouldn't mind too much if gold was $8,000 an ounce and silver was $100 an ounce, right? So here's a chart of silver futures going back into the 70s. 1980, the high was $50.50. 2011 was $49.70 or something like that. And here we are now, and you see we haven't seen these prices since like December of 2012. And so take a good look at this chart, because if you have only been buying silver in the last few years, you maybe only know these prices of $20, $25, $30 an ounce and think that this is kind of the base and it's only going to go to $100 or $200 any day now. But this is the reality of silver. These high prices lasted for a very short time. Look at the gap between this high price and how long silver's been sitting at like $5, $7, even after this run up in 2011. So from the high in 2011 to the low in 2016, it lost about 70% from the high and has been sitting at an average of around $15 for a long time. And now the new average seems to be in the mid 20s. So this break above the previous resistance of about 32.50 and these two highs of about 30 is something that you should really keep an eye on, because this didn't just kind of creep through it. This blasted through that previous high, almost up 7% on the day. That is a huge move for silver. So, why did the price of silver break out now to these highs not seen since 2012? Is it because all these silver stackers and redditors are buying silver to break the back of JP Morgan shorting silver and all this? No, it's quite the opposite. You see, retail holders have been selling a whole lot of silver. They are selling way more silver than they're buying, to the point where many coin shops, as soon as they buy silver off their customers, they send it right out to the refiners to melt it. They don't even try to sell it because not a lot of people are buying. And so the most recent video of Vermilion Enterprises on YouTube, the coin shop in Florida, he talks about that, what he's seeing himself of all these sellers and very, very little buyers.
Scott's1356 says, wait, 50 cents over spot for bars, meaning 1 ounce silver bars. That's an incredibly low price. It is, and we have sold zero in about 3 to 4 weeks. I don't remember the last time we did sell 1 ounce silver bars. No one's buying.
No one wants 1 ounce silver bars.
We're going to start burning them here pretty soon. So yeah, it's cheap price, and no one cares. William Grimes says, I guess there are not enough hardcore gloom and doom stackers to support the market. What he's referencing there is that so much of the product is being sold at spot or melt now rather than with the premium. And he goes on to say, I know they buy regardless of market conditions. I think what we're seeing is, it's not a doom and gloom type people. I think what we're seeing is that a lot of the weaker hands have been shaken out. Now, the people who are still buying gold and silver are immune to the economic situation in this country. And so they're still stacking, but it's at such a diminished rate compared to how much material is coming in across the counter. Yesterday, our first deal of the day, 9 a.m. when we opened doors, was a $130,000 gold purchase. There was 1,000 ounces of silver mixed in there too, and most of it was foreign gold and gold bars. So I mean, we've already burned that material. It's already gone to the refinery, got it out the same day. It was actually literally sold it to the refinery while the customer was still in the shop as we were paying them. So that's what's happening. And we're nowhere near selling that kind of material or in dollar amount wise across the counter anymore. We used to, but not anymore. So it's just, that's what's happening right now. And there's just so much coming in.
So when there is bad news on silver or gold or a stock, and that every retail owner is selling as much as they can, a lot more than people are buying, and yet the price keeps going up and is making new highs, that's when you should really pay attention. It's very similar to a stock when there's a lot of bad news, maybe a bad earnings report comes out and the stock price actually goes up that day. You may not know the reason, but there is a reason. You just don't know it yet.
How did you know it was an ambush?
Whenever there's any doubt, there is no doubt. That's the first thing they teach you.
So the fact that silver blasted through this long-term resistance by being up 7% on the day is really significant, but don't start getting pie in the sky ideas like the people on YouTube say in some cases that it's going to 200 or 1,000 or something ridiculous. As you see by the long-term chart, there's a lot of silver out there and the price is usually kind of muted. It has its run-ups, and if this is going to be one of them, you should pay attention and possibly take advantage of it if it happens. So what does that mean? Well, for me, it means do not hold forever and keep an eye on the gold-silver ratio to sell or trade for gold if it gets low enough, because just go look at the chart. If you sold around the euphoria in 2011 when it went to 30, or even if it was 40 or 50, you had a chance to buy it back for 2 to 3 times more silver than you had to begin with many years later. And always remember, when something is going up and there's euphoria, the financial talking heads, Goldman Sachs and all these guys that come on CNBC, they never say, this is it, this is the end, we're going to be selling here, it's not going any higher. No, they always give a target a little farther out, a lot farther out, And if you don't believe me, this is exactly what happened to the price of oil in 2008. So does anybody remember this? May 6th, 2008, super spike could lift oil to $200 a barrel, says Goldman Sachs. We believe the current energy crisis may be coming to a head as a lack of adequate supply growth is becoming apparent. Oh no, we're running out of oil, right? This as oil hit a new record near 121 barrel on Tuesday, continuing an advance which has seen it double over the past 12 months. So it's just going to go up forever, right? So that article was here, May 2008, and you see within 2 months, oil peaked at 147.30, and before the end of the year was out in December, it was as low as $35 a barrel. Did Goldman Sachs fire that analyst or anything like that? No, because they were probably shorting up here and they needed more suckers to buy into this so they can short or at least get out of their long position. So they're always going to say a higher price target, even if they don't believe it or they know it's going to go lower. They don't work for you, they work for themselves. So keep that in mind with the price of silver, gold, or anything. So guys, while I'm optimistic about this breakout, nobody knows if this is going to be a new run up to all-time highs or not. But remember, no one rings a bell at the top. Have a plan of what you will do if we do see a silver run up. My plan is to scale into gold if the gold-silver ratio gets low enough. Now, what does that mean? How low could the gold-silver ratio go? I really don't know. All I would say is watch the price and the news. If your friends who were never interested in gold or silver start asking you about it, it may be close to the top. Or if we see 2 months of, say, 20% plus gains like we did in 2011, that may be very close to the top. But these tops do not last very long. So if you don't remember 2011, let's have a look at what happened. So this is a weekly chart of silver futures in April 2011. You see the weekly gains were slow and steady, some weeks bigger than others. And then we started having these really big gains. And right before it hit 50, look what happened. In 1 week, it fell from 48 down to about 33. That's about a 30% drop in 1 week. So we are somewhere over here. And don't be that person that says, hey, this thing keeps going up. Oh, there's a small pullback. Oh, it goes higher. I'm just going to be counting my money till 100. And then once it starts collapsing, what do? You say, oh, it's going to come back. And it does for a little bit, but it doesn't retake the old high and just suckers more people in on each consecutive bounce. Oh, this is the bottom. Oh, this is the bottom. Oh, this is the bottom, until it's not. So that's why I would say that keep an eye on it. If there are really big monthly gains, you better start thinking about taking profits or scaling out of it slowly, a little every week or something like that. So guys, let me know what your plans are if we do have a run up near the all-time highs. Will you sell for dollars? Will you swap into gold, or will you just keep holding because you have a much higher target in mind, or at least a return to $68, which is the inflation adjusted high from 2011. Let me know in the comments below. Thanks for watching, guys.